Thanks for checking out the Real Estate Today podcast. We continue our series with Bob Nelson on understanding your rental property.
I'm Bob Nelson, real estate investment broker with Pacwest Real Estate Investments. The last program, for those that were able to attend their radio session, is understanding your rental property. And I talked about understanding the physical condition of the property. Understanding, are there things that you should be doing to maintain a stable tenant base? Tenants don't like to be taken advantage of. If you're charging rent or you're delivering a fair offering, inspect your properties at least every 6 months. My other point for today would be understanding the productivity of that property. Understand the numbers. And for some of you, you bought it because it looked nice. That's fine. However, when you later sell it or when you later refinance the property, the numbers are going to become absolutely critical in the process. So the property generates a certain income, a certain attraction factor will command a certain rent. So do a competitive analysis of like and similar properties. What are like and similar properties able to command as far as rent is concerned? This is not an easy process, but again, figure out where the like and similar properties are and simply talk to the property manager or the owner or take a look at it. You'll find this information to be really helpful. And then attempt to identify your current equity yield. Now, the equity in your property, what's it worth today minus the amount of debt that you owe against it? The residual number is called equity. If you had a $200,000 property and you owed $75,000, your equity is $125,000. The question is, how productive is that equity? And we typically will measure this in several sources. The cash on cash return. How much cash flow are you getting? And in my example, $125,000 equity, if it was receiving $12,500 in cash flow per year, that's a 10% cash on cash return. That's very high. Most of you won't be quite at that level, but that's the example. Understand what your property is doing, and then take a close look at the operating expenses. I look at a thing called the gross expense ratio. That's the total dollar of expenses incurred relative to the income that's coming in, and certain properties have similar bases. This is information that I could help you with an explanation or take a look at your property and assist you. I'm Bob Nelson, real estate investment broker with Pacwest Real Estate Investments.